Well, on the balance of it, yes, there's definitely a so-called worry, fear over possible contagion risk. You've seen the currency reflecting that. In fact, like if you look at the renminbi, at this value, it probably reflects the basket trading currency. It's just the rapidity of that decline worries people. But at the same time, markets, particularly emerging markets in Asia, last month has corrected so substantially. The valuation does look very attractive for people that can see through this uncertainty period. Now, what Martin summed up just now about response from corporates is exactly what we are getting on the ground. There is scenarios of trade war delaying certain orders, but the orders are needed for capex expansion, demand still there, but yeah, it will affect a bit of the business flowing.
So there's some precautionary principle being brought to bear here, but it's not going to fall off a cliff. And if I can just pursue what Martin said there, on mainland China, should we step away from the technology sector there? Because that seems to be very exposed to the trade tensions. And how should we broadly approach the consumption theme? Is that story intact for you guys, for patient capital?
I think we have to take a much longer term, well, not even longer term, we just got to see through this event. The thing with trade wars in the past is there's always been a very structured economic response. You know, go back to the Reagan days or Bush's days, and it's one impact, we deal with it, we move on. This one is more rhetoric based, and if you see the behavior with one tweeter, it can reverse itself overnight. And the good thing is you've actually got one side of the party, China, in a very, very mature, well-mannered response. And that's good. You got one side playing the orthodox game. And I think that gives a bit of confidence. I think underlying it all over the next quarter, common sense will prevail. Business will come back into a more logical understanding. Yes, I think the tariffs that was put in place will be a first signal, but will it go to a full-blown scenario? I think at worst, it's too early to tell.
Both of these economies are too big to fail. Hadley, weigh in here.
Chou, when you look at what's happening today, I mean, this isn't just economics for the United States, is it? It's really also about security. It's about economic security, but it's also about the geopolitics as well. Yeah. How does that weigh into your strategy, I mean, going forward? Because it's not just going to go away.
No, I think, unfortunately, you have got a change in government style, leadership that is rhetorical, and you know, it's a lot of noises that way. And we all kind of miss that kind of orthodox conformality, more structured, mature interactions. And I think the world is also adapting to that. Think about it, right? Over the last few years, we've had that kind of North Korean kind of noises. And markets adapt. And markets are also adapting to what we're going through right now with the new presidency.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.